President Trump defended his latest policy pivot, a 90-day pause on reciprocal tariffs, excluding China, to reporters on Wednesday. Take a listen.
I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing. I think that our country is going to be at the end of a year or shorter, but I think we're going to have something that nobody would have dreamt possible.
Just last week, Trump vowed on Truth Social, "My policies will never change." So what exactly prompted the president's policy U-turn? Joining us now, we've got Jason Furman, professor at practice at Harvard University and former CEA chairman under President Obama, alongside Terry Haines, Pangea Policy founder. Great to have you both here with us. Let's just go into the policy for a hot second. And Terry, I want to get your reaction to the whipsaw reaction that we've seen, not only in the markets, but specifically from those who are even closest to the president right now and representing the U.S. on trade.
I got to say that I think the whipsaw is a little bit overstated if you go past it. You know, the policy concern still remains. The tariffs are more focused, and we're going to have a lot of negotiations in the next 90 days. So we may end up being back pretty much where we are today at some point, and that's probably one reason why futures are down a little bit. The staffing concern, the comms concern, I think is largely resolved. Bessent's clearly out front. That's a good thing. Gradualist, all the rest. This is never going to be all one thing or all the other thing. And Trump is very urgent about this, not just because he's got midterms coming up, but because he thinks this is a great opportunity to resolve a lot of the geopolitical issues and get China to the table in a way that actually lowers the geopolitical risk temperature. So that's a big thing. Meanwhile, what you're going to see is Trump pivoting very strongly towards getting the tax cuts done in that same 90-day period. So that's a very big deal also.
I'm going to come back to you on those tax cuts, Terry, but Jason, I want to bring you into the conversation because you had a great post about how these tariffs on China do in fact outweigh the totality of the reciprocal tariffs on those other 70 plus countries. So where does that leave us in terms of the impact of this policy?
Yeah, yesterday's announcement was a tariff shift, not a tariff reduction. And that's going to dawn on people. Businesses are waking up thinking about that. I've heard from some. You're going to start to see it in the data going forward. Just to step back, on the campaign, President Trump said 10% across the board tariff plus 60% on China. We are now above that when you take into account the sectoral tariffs and, of course, China above 100%. Tariff. So by any way of looking and thinking about tariffs, the United States is now an extremely high tariff country, and you're just going to start to see that in the data in the coming months. The good news yesterday was the president did show that he cares about the bond market, did show that he cares about the views of the Treasury Secretary. I hope that continues, but anything is possible with his decisions.
Let's continue that. Jason, I want to take a listen to what President Trump had to say about the bond market.
Bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy.
Yields on the 10-year were obviously soaring earlier this week, and the president referenced that. But now we are seeing yields coming in just a bit. Terry, did the bond market actually move the needle for the president, or did Treasury Secretary Scott Bessent convince the president that the move in the bond market was significant?
Well, I think it's probably a little bit of both. The bond market certainly was a concern, number one, and number two, we know that Bessent's been telling Trump that he needs to make sure that his communications are much clearer with markets generally. So I imagine it was a little bit of both, yeah. But you know, they're going to continue on as Jason says, and I agree with his view that it's a shift, not some sort of volte-face.
Jason, want to get your reaction to the same?
Yeah, I mean, we don't know why the president made his decision. Probably the scariest thing I read was in one of the Wall Street Journal inside stories, which said he knew it would be a recession, but he wanted to prevent a depression. And I guess that's good news that he wanted to prevent a depression, but we are making a choice to have the unemployment rate go up, the inflation rate go up. All of this is going to put the Fed in the box. This morning's CPI print takes a little bit of the pressure off. It's going to let the Fed be a little bit more focused on combating rising unemployment. But we're still early days in the macroeconomic effects of both the tariffs and their uncertainty they've unleashed.
And so with that in mind, we've talked about who internally the president might be listening to, but externally, it seems like he's paying attention to what those on Wall Street might be saying, regardless of whether or not Scott Bessent is saying that Wall Street's had its time for Main Street. But clearly, when you have this many economists and CEOs talking about unprecedented uncertainty, that's got to grab the ear of the president to the extent that he doesn't want to see a bear market and doesn't want to have a recession on his hands, even though he's acknowledged that there will be some near-term pain.
Yeah, look, I mean, if you compare to what we thought about him 24 hours ago, he is more responsive to markets than many of us feared. If you compare to what we thought, to a couple months ago, he is still much less responsive to markets than we thought. So all of this is a matter of framing. It was like dialed way, way up, and now it's been dialed back a little bit. And overall, though, this is a man who is still presiding over a stock market that's down quite a lot since his inauguration and doesn't seem to be making any fundamental set of changes to respond to that fact.
Terry, I want to end with you on tax cuts. Senator Thune saying that the Senate is aligned with the House, that many senators do want to see more than $1.5 trillion in tax cuts. How likely do you think it is that we could get those policy sweeteners that the stock market has been looking for sooner rather than later?
My guess is this, Madison. Politically, I think it's almost impossible. You look at things like Medicaid; that's a third rail for an awful lot of Republicans, and what they're more focused on is the biggest tax cuts possible using a current policy baseline, which sounds wonky, but what it means is that they get to vastly pump up the amount of tax cuts without having the pain on the funding cut side. Number one. Number two, neither Democrats nor Republicans have any appetite for this. Republicans' big view is last year was that they'd cut 1% from the 30% of discretionary spending. So these are by and large not Braveheart types who want to take an axe to anything. And thirdly, did they all want to get reelected? And what's going to end up happening here is Trump's going to drop the political hammer on them and force them into the same box that the Senate's in right now.
Jason, just want to get your own, and actually, you know what, Terry, let me put this to you first, and then Jason, I'll get your reaction. Terry, what does the next 90 days look like, realistically?
Well, realistically, the next 90 days looks like continued negotiations, probably some wins, continued jawing with China, maybe without result. Other geopolitical hotspots continue on. Doubtful we'll have some sort of Ukraine deal that's acceptable to everybody. Doubt that the Middle East is going to go away, and those are both, and doubt that we have a deal with Iran, which is these are all geopolitical flashpoints that China plays massively into. So I think it's going to be very unsettled for markets, and it said so, frankly, before the tariffs even kicked in.
Jason, just want to get your reaction. Are we due for an early summer surprise in the next 90 days?
We're going to get surprised over and over and over again in the next 90 days. What I don't know is if those are going to be happy surprises or sad surprises, but we're going to get more of it, and that volatility itself is a problem and is bad.